Okay, I'm just going to do a quick market update. I'm going to run through my weekly market technical screens, and we're just going to have a look at the changes. We've seen a little bit of activity last week in these screens, so we're going to go through the trend models I run. We'll have a look at a few of the markets. First things first, I will just bring over my own website. If you're interested in what I do, I share all my research via Trading Basis Inner Circle, and you can move in onto this page and just have a read of testimonials or have a read of the members' journeys. This is going to be a little bit more insightful to how people use my site. We have an extremely low turnover, and I'll just leave it at that. I will also just say, if you move over to Share Scope and just click on this Jason Needham and move down to tuning out of the day-to-day noise and have a look at some of these big picture levels. This is a bit more in depth of what I'm going to talk about today. We've been talking about these big picture levels in the market. We've got a little bit of a few green shoots, I would say, we're seeing this week. So obviously you can see those green shoots on my trend model. It's strikingly obvious. So this was the pandemic lows. We got embedded to the upside for some time. We fantastic trends in the market. We drifted off, then we spiked higher. We literally traded 100% bullish readings, and then a lower high, lower low in the trend model. And off we went to the lows. And there was a flurry of activity into this last little bounce. It was, it's the first kind of real bounce in the bear market we've seen. And we had a zone alarm to the short side in my screens, and that one played out like a dream lower, took the lows out, and now we're seeing a bounce with, the first little bit of activity worth looking at, I would say, probably. So I'll actually just jump onto the index trend model first, and first thing you will notice here is large caps are up in the neutral zone, and small caps are still ticking on empty, and all things together, we're a little bounce off the lows. So that's where we're at. First thing, I always say, do not get the FOMO. If this market has put a low in already, you don't need to get the FOMO. It's how it's, it will it might go straight back to highs, but stocks won't go straight back to highs with the, it basically, you'll get some kind of consolidation, and the best place to get involved will also be the most obvious, and think about 2016, 17, the markets took the highs out, and the first pullback was actually the best, lowest risk, lowest volatility sort of move into that. Those stocks and trends were moving before the market took the highs out. The leaders had already set off, but en masse, everything moved out on the first pullback. One market does not make a trend. So if you're seeing a bounce in the DAX or the Dow or the FTSE 100, FTSE 100 being the least meaningful market out of all the markets, it is what it is. So in the risk champagne fountain, the risk will flow into those big blue chips first. And, that's what you're seeing. You're seeing a little bit of activity move into those bigger stocks, and small caps are on empty. Now, this does not mean that you don't trade small caps, you only trade the large caps. No, nothing like that. It just means it is what it is. You're just seeing a bit of risk flow into those main market stocks as, dollar earnings in some of those companies, and, make of it what you will. That's all we've seen here. So if the low is in and the market consolidates and the trend models start to move up, the price action is on the floor. The trend, we've got the short-term trend trying to tick up on the likes of the Dow and the DAX and even the Russell, I think, which is the small cap market in the US. So the trend is trying to recover through time. We've been going sideways, for a while now, and markets consolidate through time or price. Doesn't mean they can't take the lows out again and go on another probe lower. I would say, it would set the markets up. The markets are already set up fantastically well, aren't they? The destruction in the US especially. But another probe lower would just be, a gift for us going forward. But we'll see. We don't need to predict these things. But, let's just jump out of that. And let's just jump into the markets. We'll go back to the dollar. I've kind of covered these in the ShareScope tutorial. I know it was done in May, that tutorial. I do not need to keep hammering out tutorials to get this stuff across, because markets don't unwind that fast, So this is where we are with the dollar. Historic sort of levels against most currency crosses as well. Forget the pound, go and have a look at all the rest of them, The dollar has been trending for quite some time. We put a baseline in on this. We bracketed it before it broke out, and we said above here or below here. So, it was bearish, and then it kind of went neutral, and basically it broke out, and it's been trending for a year now, and we're up at historic levels. We'll just jump onto Bitcoin as well. The timing of these things is uncanny, that they can put the high in the market, but Bitcoin is down in this level. Doesn't mean it can't come lower, but it's an interesting area. If we saw some spiky volatility around here and then some, this thing is not going to look bullish until it's put some price action in. And think about the last time it came into the 50-month. We put a little base, active low, higher high. It went off on a run, and then it consolidated, and then it made a nice little base, and off it went on its journey. It made a fantastic run as well, 500+% from that last one. We've just got to pull back here. It's early days, but it's a big level to pull back to. Doesn't mean it will always hold. But we're just looking at interesting levels. TLT is obviously, right down there. I thought it would, it still could just do some sort of spiky, messy action around here, and that, the low might be in on it. It sort of looked, a couple of weeks ago, it looked like it was trying to put a low in, didn't it? But it's early days. So, let's just go through these markets one by one, and I'll just go up to the transports first. We're in the big picture level on the transports. I think we've got a better level below us. I think we've got a bearish channel here. The reality is, if this breaks this bearish channel, that's good. When a really bearish looking pattern breaks to the wrong side, that will be more interesting going forward. The Dow, Papa Dow, down into this level of interest, and off it went, and it's rising over the short time frame there, and we will see. We will see. The S&P, literally, the S&P usually one of the strongest markets, it's usually the last one to land. So if you read the tutorial, we look for the strongest market to come into the first zone of interest before we even think about the upside on as a group. And the strongest market literally tagged it on this day. These have been, since I did that article in May, these have been in on the screens. But still, we're still in a downtrend. It is what it is. I think a bit more of a harder reset would be good, but I'm just going to trade the right hand edge as it unwinds. If the risk model unwinds and lets me put a little bit more risk on the table, that's how I will take it. Nasdaq looking pretty weak, big interesting levels. The Russell looks like a bear channel to me, but it's trying to turn up over the shorter time frame. It's turning up and it's helping the trend model. The same with the DAX. The DAX is, people will be calling that a bear trap. It's dropped below this level here, and it's moved back up, and it's trying. Time or price. Time is trying to unwind the sort of the bearishness of the markets at the moment, and also the FTSE 100. It's just the FTSE 100. There are no levels of interest on this market. It's probably the worst one to sort of look at as well. It's just been going sideways for 2 years now, so there's not really anything to see there, is there? 250 looks absolutely awful. It's the worst looking market out there for the bulls. Needs work. Small caps, obviously, they look pretty horrible as well. We're in that first zone, but with it being the small caps, I added another zone down there, and that's your 200-month moving average as well. So just have a think about that. We might be down in the 4,800 area on the small caps. If the markets don't basically find their legs. One market does not make a trend. In the risk fountain, small caps are at the lowest level. But that being said, it doesn't stop me trading small caps. I'm going to trade the best of the best. What break out or what do first pullbacks as the risk model unwinds. I'm not predicting anything here. I'm just waiting for it to basically enter my sights. So that's where I am with that. What I'll say is we had a few swings setups in the US and a few swing setups in the UK, and they're working. I haven't traded many swings at all this year, and I've only taken a few recently, and they are working. What's been working for me this year in short-term intraday in the flip-floppy markets is basically something I trade on an intraday basis. That's been the bread and butter for me. What's trying to work? Swing trades are trying to work. It doesn't mean they won't turn around and bite me on the ass. What about trends? Well, trends unwound, and basically some trends are still doing okay. Not really in sectors what I like to ride trends in, but we'll see. We'll see what starts to hit the screens. One thing before I close this, I will just say, the old recency bias. I've noticed it over the last few weeks. You'll read it a lot of take profits fast, the mark, all that kind of stuff. A profit is a profit. Take profits fast because the market is basically taking those profits away from you. That's a true statement. But when I take a trade, if it's a swing trade, I trade towards my swing trading target with my swing rules. If it's a trend trade, I trade towards the moon with my trailing stop. Now, if I'd have been trading towards a short-term target on on the trend trades I've taken this year, they would be making money. Pretty good hit rate. But the reality is that more money is lost by not accepting those paper cuts, and basically I micromanage. I might take a trade tomorrow, a trend trade. It might be I'll take the buy point, what I should be buying on the stage one base, say, and it might be the next big winning stock, and I might sell it into the first pop. So I will never do that. I will always stick to the methodology, because I know that the short-term gains, when times are tough, everyone sells into that first pop of the new bull market, and they see those profits on the table, and it's like a slippery bar of soap, and sometimes the market takes it away and you have to reset and wait for the next one. But if I'm riding trends, I do not, there's always going to be operator error. You've got to be able to make money with a bit of operator error thrown in. But, there's a little bit of micromanagement and operator error, what can, I can stand. But abandoning the plan altogether is going to cost me dearly in the future bull markets. So I will never do that. Just think about that when you start making opinions on what you should sell, what you should buy. Think about what you've back tested in your methodology, and think about how it should play out over time. We're in a bear market. Nobody in my sight should be heavy long anything, really. It's if they're anything like the way I trade using risk management, you would have been unwound out of the market months ago. And, that is the reality, So I'll just leave that thought with you, and we'll see what the week brings.